Hi everyone, good evening. I just like to have a confirmation that you can hear me loud and clear. So let's try out the question box. If you can, just type OK. All right, great. Have you taken your dinner yet? So the session will be until about 8:30. There will be questions, and if you would like to ask me questions along the way, you can ask me at the question box. Okay, so I have the other screen that shows the question. The front screen will show my slides. All right, so let me just continue the session that I'm going to talk about, the ideal strategy to counter professional traders. All right, before that, let's take a look into the disclaimer. So the session is purely educational, so there won't be any, we can't provide any financial advice. If you need some financial advice, please look for someone who is qualified to provide that. All right, a bit of introduction about myself. Not sure you have attended any of my sessions, but I've been doing training for many years already. I'm also training for SGX, and my courses are also with the IBF, the International Banking and Finance. All right, I'm trading. All right, I'm trading into a lot of instruments. All right, so I've listed some of the investment that I have. For example, under the passive income, I have the S-REITs, the bonds, the mutual funds, etc. These are giving me the income, all right? Of course, with the property as well, all right? But in the day, I'm actually quite busy because then once the Singapore market opens, followed by the Hong Kong market. So before the Singapore market opens, the cash market, then I'll be with the futures. If there's opportunity with futures, then we'll be trading the futures. Then once the Singapore stock market opens and then Hong Kong equities market open, then of course then I also have the indexes and the forex and commodities, right? Then perhaps that you ask me, how do you handle so many things? Because a lot of my trades are automated, meaning that, and we have a team. So what we do is that, as a team approach, they will look at some of the trades, and because it's automated, so a lot of processes are done not manually anymore, right? So therefore, that's leaves me quite some time to do some other things. Okay, and because of the automation, then the bulk of the method would be actually very, very mathematical. All right, quantitative based. So myself, I also help with development of a lot of different trading algos for my clients. All right, so they are huge traders, right? So and because of this, all right, you will realize that whatever that I'm going to cover today will be very relevant if you do have a lot of problems, or if you do find that recently, right, the mood of trading or the way the trading style is very different. Okay, meaning that if you have been trading for the past decades, okay, a few years ago, or maybe 10 years or 15 years ago, you realize that that was the previous style. But now recently things changed a fair bit, right? And the movement are really what I say very abrupt and very sudden. Right? Then perhaps that whatever that I'm going to cover here might provide a bit of an explanation to you. Okay. All right. So let me just proceed. Just as a question, I'm just going to do it a little bit slowly first, because not many might be, some people might be just on their way to join the session, right? So just to ask a bit of a questions, and if you can let me know your reply with the question box, okay, at the question box. Has this kind of things happened to you? For example, after you bought, all right, price moved down. Okay, and after you have shorted, because short means that you think that it's going to be bearish in the future, all right? And after you have entered your sell trade, your short trade, instead of price moving down, which would make you the profit, and price instead actually move up. Okay, so or for example, you have already an existing position, you bought in and you waited for a long time. But because you bought in, you think that price might be heading up. But however, instead of going up, price kept falling and falling and falling. And you decided finally one fine day and that you want to sell, you want to take the loss because it's beyond your tolerance already, because the loss it's going to be so huge that you have to sell. Okay, and what happened after you sold? The moment that you sold, right, price instead, right, stop falling and then move up and say, hey, look, why is it me and why is it always me that's going to encounter this problem? Okay, so the idea is that you're being stopped out already, you make the losses, and instead of it's moving in the previous direction, right, that's moving against you, in fact, it's reverse and move back up. Or for example, price has been going up, right? So because you shorted and price has been going up, and then you decided to cut loss, and after that, soon after you cut your losses, it just move in the original direction. And you thought that, hey, look, you know, if I don't cut loss, I might be able to at least break even. Have all of this happened to you before? Or, you know, this kind of things, you don't even experience it before. Okay, so is it always? Is it always? Sometimes. All right. Now, I'm sure that you do have this type of experience, and if you have this, then definitely you are not alone. All right. So today I'm just going to talk about specifically why such painful experience it's always happen and it's always recurring. There are few reasons for this to happen. All right. So number one, because we have a lot of derivative products. Right now, we are not only trading into, for example, equities. We are not trading purely into forex, or we are not trading into, let's say, purely into gold, where commodities, where the old type of trading, you know, is still true. For example, the previous type is that, let's say you trade into gold, the bullion. Then, if you, let's say, need to deliver your bullion, you will just deliver that. But then there are a lot of other instruments in relating to, for example, to gold. Let's say, for example, we are trading the equities, right? Then instead of just trading purely to buy the equities in, let's say, with the exchange, then there will be a lot of over-the-counter products that are being offered to, let's say, the high net worth clients. So for example, there are things such as the equity linked notes, which are being offered to the high net worth clients, and then they can trade that as well. So there are many of these products, and these products happen in a way that it makes it in a way where the makeup of these products makes it very lucrative for certain price level to happen first. Okay, why do I say that? For example, if you take a look at the equity linked notes, all right, so every month or every period of time, the clients will receive an income, interest, if they never hit their levels, okay, never hit a certain levels. Right now, what happens if after some time, let's say at the end of the year, when it's hitting into the maturity, that at this particular time period, that level was being reached, and then clients would have to incur loss, right? Then they would have to, for example, buy that equities or buy whatever instruments that they're trading at a higher price, much higher price than whatever that it's happening right now. But because of all this that's happening, it makes it very lucrative, all right, to trigger certain levels, okay, to make sure certain levels are happening, or must happen, and then quickly it reverses the other side. So when we are doing a lot of consultancy works for our clients, a lot of all this automation for our clients, all right, the clients will also take a look into what's happening into the options market, all right, into the volume flow, into, let's say, the implied volatility, etc. All right, then they would trade accordingly to all this bigger indication, the larger indication here. So it's not purely just looking at some indicators to trade that, for example, something that cross up or oversold, overbought. It don't happen this way. And because of all these things, then what you're going to find is that many times price will be forced to reach a certain price level, and after that, immediately it will reverse the other side. Okay, and then the whole bulk of the programming, all right, for example, automations and what big boys are trading, a lot of them are trading in this manner, especially if they know the levels and the volume. Right? Meaning, for example, if they launch all this product themselves, okay, of course they know that how many clients and what's the volume and what's the levels that would hit right at the point where they're going to make the most money. Okay, so therefore, when these are being all programmed inside all this huge market of the over-the-counter, then definitely whatever that's happening will be affecting the equities market or the forex market, or whatever markets that the retailers are trading on. Okay, so well, that is the bulk of a lot of programming inside and a lot of how the big boys actually trade. Okay, they have all these levels and they know all these volumes, and sometimes it makes sense simply to do what? To flush a certain levels. All right, so we call this flush, means that to purposely push price to a certain levels and then you know, and then reverse as if nothing happened. Okay, now what I'm going to do is I'm just going to go to my chart right now, which is a Phillips Futures MetaTrader 5, and to show you some of the live, you know, some of the recent case study that we traded, and to show you what's happening, what do I mean exactly by that very sudden price movement. Okay, so what you're going to see now is the Phillips Futures MetaTrader 5. Okay, so at this place you're gonna find a lot of different instruments here. All right, the first one that we are going to take a look is NASDAQ. Okay, now take a look at NASDAQ here. Right. If you can focus into these two bars here, so that's the one that I highlighted, you realize that what happened to price. Okay, price move up so drastically as if that it feels that it was very bullish. Okay, now what do I mean by here? If I were to just hide the price a little bit, okay, just hide it a little bit, right? Okay, at the right side of my screen, if you take a look at what's happening here, now it's almost as if that if you apply the traditional way of trading, right, it's almost saying that, hey, look, you know, price is right now to a support, okay, support given by the previous low here, right, and there seems to be a bullish candle. Okay, so for example, if you look at the traditional way of candlestick trading, so this could be like a doji look alike, okay, in a very strong support, and then after that price reversed up to make a bullish movement, right, it closed above the candlestick high. So that's a typical way of what you're going to read in books, all right, and what probably a lot of internet and what you can learn from the public domain. So for example, you have a candlestick, you have a support, you buy when the price close above the candlestick high. Okay, all right, now if you take a look and if you look at the price movement, it seems that right till the close, right when it closed up here at this right hand side that I'm marking here, right, let me just get the pen, right, to mark to you. So this place here, right till this particular place here, at the higher, it's almost as if that price seems very, very bullish, okay, right? And seems that it's just going to move up, and NASDAQ it's going to rebound to hit all the way up. Okay, so that is what a traditional way of trading looks like. But if you take a look at, okay, let me just off my pen. If you take a look at what soon happened, right? Okay, this portion here, what soon happened was that instead of price heading up this place here, instead of it going up, it immediately flipped the other direction, like almost a 360-degree turn immediately. Okay, so it hit all the way up like it's very bullish, then immediately with nothing to give you a clue that it's going to fail, the next day it doesn't even result in a small little movement. It's almost reverse that bullishness that's being created here. Okay, so that is happening really very often. I can go through all the NASDAQ charts or any charts that you're gonna find, all right, and that kind of huge drastic bars, the immediate reverse happens right in our eyes. Okay, so for example, somewhere around here, that's almost like going to be very, very bearish, a very bearish bar that you can see here. Immediately it flipped the other side. Okay, now the recent one recently happened. NASDAQ was really looking very bearish at this point here. all right? And at this point here, why? Because then people are taking a look at the 10-year yield, and they are saying, hey, look, with the 10-year yield, then there's a rotational switch, right? And then they are switching out of the growth, all right? Basically switching out of Nasdaq that has basically moved up but quite substantially over the past 2-3 years, okay? At least, you know, after COVID till now. Okay. Now, then you realize, hey, look, why is it that price will do this very erratic, drastic movement? It goes like one bar down, one bar up, one bar down, like a huge fight. And at this moment, the news flow is probably going to say, hey, look, you know, Nasdaq plunged by 300 points, 400 points, and after that, what happened? It just flipped the other side like this, okay? A long, big bar, like nothing happened, all right? Then you can say, hey, look, you know, this is a typical engulfing pattern, all right? But what explains all this? Why are all this happening, right? You can look at the news flow and say, hey, look, I'm going to get out on Nasdaq, I'm going to go short on Nasdaq, but immediately after you have shorted, it just boop, no other reasons, it just flipped the other side. Okay, so these are very, very drastic movement that we are detecting that it's happening right now. It's not that the old way doesn't work. It's just that they are not working as well as versus what we have observed in the market. All right, so let's take a look at, for example, this one here. This is the SG100, which is moving like the Simskis. Okay, the Simskis is the Singapore futures, is moving like the cash index, which is STI. This is a week chart. I know that week chart, you are telling me, hey, look, you know, if I'm trading, how am I going to trade on a week chart? Okay. Now, but if you take a look at what's happening, something happened at this point here. Same thing, that long big bar here, all right, a huge big bar, and then it flipped the other side. Okay, you may say, hey, look, this is a bullish engulfing. But why is it that, you know, this huge long big bar, all right, why was it happening? And do you realize that every time when price flip downwards and then move upward drastically, the subsequent movement, I know that this is a weak chart, but the subsequent movement, they are always very explosive. Okay, so likewise for a lot of other behavior that I'm going to show you later on, they are always very explosive. Now, what is happening right here is that this type of price movement, the one that I'm highlighting here, there is a high chance they might be purposely being pushed down. Okay, so I'm just going to clean my chart, explain the rationale of it and why is it happening this way. Now, if you take a look at the STI, all right, now STI historical level was around the 2005. Now, this level here, 2005, happens to correspond to the Simsky level as what we are seeing here. Okay, now so a lot of people could have to put in, like, let's say, an over-counter trade to say that the STI will not close below 2005. Okay, they might have put in quite some time ago, especially when it's equity linked notes or some over-the-counter products. All right, so when this happened, 2005 becomes a very, very strong level. Now, if you look at the professionals or if you look at the huge player here, it makes sense, for example, that they might be accumulating here at 2005 because at that point could be very low. But how to make sure they have accumulated enough? How to make sure that you can actually sell to them, all right, or sell to the big guys, big players here at a cheap price? Then they have to push price down. And because of a lot of derivative products that's been out there, and they work on the close of a particular level. So it's not only a touch only, but as long as it closes below, let's say what we call a strike price, a certain level. Now, when this level happen, like option, then it will set into motion. Okay, so for example, 2005 key level could be something that a lot of people are aiming at, and they might put certain trades here, or they might simply put a stop loss here. So they just have to wash it down. That means to push it down, trigger a lot of stop loss, and after they have done that, all right, they just have to touch that for just one single day. One single day is all what is being required. And after that, let it go and resume its original movement, because then it's very pent up already. They just have to do this one single day. Okay, so today what I'm going to introduce is this phenomena, all right, which is called wash and rinse. Okay, now this wash and rinse is exactly to let you know something of such, right, which is like fake move has happened. Now, most important for you, what is important is, number one, is for you to realize that these are out, these patterns, okay, wash and rinse patterns are out there, all right, and it's happening right in front of our eyes. That's number one. More important is to know how to treat them. Not saying that avoid them. That, I mean, there's no way that we can avoid, because all these has been there for decades, for 100 years, and this is how they make the money. All right, but at least we know it. That's more important. And more important, we can trade together with them. Okay, not to say that, okay, we move aside, but if we know and we can discover all this phenomena, we can trade together with them, and the money they make, we can also make some as well. All right, so I mean, if you have looked at some of my videos or recording, I talk about buying into the banks when it was around here, right? That means that when the the pattern has already happened, all right, you can see this green arrow here, this red arrow here, that's what we call that artificial push. And then once it reverses back up, a particular green arrow here. And recently, I've also caught for the buy in banks, all right, somewhere around this arrow level here, all right, and also slightly earlier at 10:35 for OCBC. If you can see the pattern that I'm trying to introduce, which is called wash and rinse, the subsequent movement are really very explosive, okay? Because then that's where, after wash and rinse, you know, people feel a lot of pain, right? And in order to overcome that suppression in price, then when they really let go, that price movement will happen very fast, okay? Now, in case that you are curious, all these arrows here, all right, up arrow means that it's a bullish wash and rinse indication. Down arrow is like a bearish wash and rinse indication. All this has been automated to recognize that wash and rinse. All right, so I'm just going to move on to my slide so that I can show you what the wash and rinse is about. Okay, now, so just to sum up, right, just to sum up this chart, because of technology, because of a lot of new instruments, you realize that price movement are now very sudden. Price range are easily exhausted. The question is, when price range are easily exhausted and the price movement very sudden, then your question will be always to chase or not to chase. Should I enter or should I not? Right? And because of many financial products available, right? Sometimes the levels, okay, levels means that you thought that 2005 is a support, but perhaps that because of the other financial products available and the volume and the levels that other people are seeing, then perhaps that levels are very near and very complex. Okay, and you have, let's say for example, the big guys, they have the technology, they're able to see all these levels very well. Unlike us, I mean, we only have one pair of eyes, right? We might not be able to find all these levels and to know all the hidden levels that they already know, all right? But and because of this, and because of the experience that we have with a lot of huge big players, then we also overcome that by discovering, you know, ways to trade together with them. Okay. Now, just to put this one up, because I'm going to come back here to talk about Xiaomi, which is a stock that I presented last year on the 20th of July with the SGX Academy live trading, right? The movement after my presentation, meaning that I actually said, hey, look, you know, I think that we might be able to consider Xiaomi, right? There are certain things that I'm seeing here, but after that presentation, which happens at the green arrow here, price actually bursts up. Now, there's a very, very important indication to why sometimes the stocks that you have or the trade that you have, sometimes it will take a long, long time. But others might have easy time, like for example, the moment they bought, the moment it just put up already, and they're going to make that 100% or 200% gains, like nothing happened. So, I mean, you have to start to wonder, why is it that your trade, or sometimes some trades, right, will take a long, long time, and why some trades explode upwards? Okay, so I'm just going to come back again. Okay, now again, that just how I showed you on OCBC, right? Same thing for OCBC. Why is it that this is the week chart? Okay, why is it that at this place here, all right, the trade exploded upwards, and then at some other moment it just go very slow, and then after a while, right, it exploded upwards. Okay, all these are all automatically plotted in our system. Okay, meaning that as I explained, because of the many instruments that we are trading, our team is trading, and also because of the need to know the signal very quickly, right? So then we need all this indication to let us know. But I just want to bring up, right, that price will explode upwards. Okay, so that's also the second thing I want to talk about. Same thing, right? This was gold last year. So gold moved from 1,800 all the way to 2,000. You realize that the movement after that little green arrow pops up, right? It just moves straight line non-stop. Why is it that sometimes it goes one bar up, one bar down, and goes flat, doesn't move? Why is it that sometimes it actually goes huge up? Okay, so that there is a reason behind. For example, this US election last year, right? Some of the green arrows are being plotted here. Can you see the green arrows and the red arrows here, right? Why is it that we know what we need to be considering to buy, and what are the things that we're looking at that resulted in the huge up? Okay, now, so therefore, coming back, right? What are the factors that lead to these explosive movements, and then how do you look at that? Now, I actually have a video to show, but I don't want to show that video. I just want to talk about that and go back into the NASDAQ chart. Okay, so let's take a look at this place here, which is back into the NASDAQ chart. All right. Let me just switch my screen. Just give me a minute. Okay, right now you're at my slide here. All right. Now, there is. Let me just focus somewhere around here, this portion. All right. I'm just going to clean away this box. Okay. Now, take a look at this portion here that I am marking for you. This one here. Okay. So what we have is that there's automatically plotted this green arrow here. So that's the green arrow, up arrow, and then there's one more arrow here. All right. Okay. So just take note of this one here. Okay. So I'm just going to clean away erase my drawing. Okay. And then to do a marking to let you know we are focusing around here. All right. Now, can you see that there is actually a support being formed here? So all these are the slight support, meaning that price had a bit of a drop, right? Okay, there's a support here. All right. Now, if I were to take any form of let's say, lines or indicators or any things that I can draw here. Let's say, for example, I see that there is a trend line here. For example, I'm just going to draw it like this. Okay. Then, based on the horizontal levels, based on the trend line, and based on a lot of things, it seems that price is moving up. At least that this huge drop, it dropped right into a support. Okay. Now, so a lot of people would be looking at this low. All right. Okay. I'm just going to mark this as 1. Okay. At the low at 1 and the low at 2 as a reference point. Okay, meaning that they will say, hey, look, we have a day that stopped here, we have this day that stopped here, and NASDAQ actually dropped by quite substantial, and the trend is up. It's going to hit into a trend line or support levels or whatever you want to call it. All right. So what would a lot of people do? They will attempt to buy, let's say, somewhere around here. All right, they might buy somewhere around here. All right, they might buy somewhere around here. Okay, so these are the places that they might be buying, right? And where would they put the stop loss? Stop loss will be a place that will let them know that, hey, look, any price that is below that particular level, it's going to be bad already. The trade is going to be sour. Okay, where would they put the stop loss? Okay, a logical stop loss is to refer to the previous low, because then that's where it bounds up, right? From here, it actually bounds up. So a logical stop loss would be to put the stop loss at the low of candle 1, all right, or candle 2, okay? Meaning that if a lot of people would be putting the stop loss at this level here, for example, or at this level here, okay? But as I explained, okay, because of automations, because of a lot of different instruments, because of the let's say the options, they know the volume, they know the levels, all right? So it makes sense to make price purposely down to flush out that buy trade, okay? To flush out that buy trade and to flush out your stop loss as well, okay? To trigger that. Because if they can trigger this place here, all right, that means that if they want to accumulate and then they trigger that, and they're gonna buy that at a cheap price. But what did they do? They're gonna cause a lot of panic, because then if you take a look into a typical, if you take a look at a typical breakout strategy, just give me a moment. If you take a look at a typical breakout strategy, for example, breakout means the price is gonna break below, okay? Then there might be some people who's gonna think that price is so bearish that it already broke out of that previous low already. If they don't at the intraday, all right, based on this particular tail here, they might trigger some more stop loss at the higher time frame. Okay, all right. Now we call this type of a behavior that artificially push the price down. This type of behavior. All right, and then we call this down bar here, we call this a wash, a W. Okay, we call this a wash, all right? And then when price flip the other side, we call these a rinse, okay? All right, it means that those people who, let's say, happen to short as well on the break of these two levels on the lower time frame, all right, or happen to give up their trade because they bought in to give up their trades at the lower time frame, right, then they just been washed already. And then not only that they've been washed, meaning that they make losses, not only been that, right, they actually been rinsed. Okay, rinsed means that when price move back up, like this bar, the second bar here, right, they're gonna feel double or triple pain. Okay, you know, for those people who have been stopped out, they will feel very painful. And what do? They say, hey, look, you know, I bought in and then it cost me to have a loss, but it's moving up in the correct direction. Let me just enter. So they're going to jump in and buy. Okay, now those people who have gone short, that means that they have, because of this black color bar, all right, trick to go short. What will they do? They are selling right at the bottom, and when they see it flip the other side, they will be looking to buy back their position. Okay, so they will also be buying, right? And then there'll be this genuine group of big players here. What are they doing? They are happily buying at the low, and the shorties who are covering the trade, people who regretted being stopped out are also buying. All right, they're all adding the oil into the fire. Okay, so whoever who artificially push the price down, it's gonna find that their profit is gonna move up huge, fast, and quick, because then a lot of the oil are being poured into this fire already. Okay, so that will explain why it's an explosive move. And what we do is that, of course, right, we quote this, we found this in our trading, and then we realized that we are very much in line with a lot of huge traders, huge players out there in our consultancy work. And so we are, right, trading very often just purely on this pattern here, which is called wash and rinse. Of course, there are a lot of other reasons a lot of other factors that lead to a good wash and rinse trade. Okay, but today the objective is just to introduce to you, all right, this wash and rinse phenomena in the market. At least you are aware about it. Okay, it's not that, for example, you say, hey, look, I know Binni is talking about wash and rinse, right? And then let me just look at wash and rinse, and I can just find them, I just trade that. There are also other factors that we are looking at. But generally, the wash and rinse is true. Okay, now let's take a look at the other pattern here. So this is another pattern. Price has been artificially pushed up. Okay, push up here. All right. However, based on our system, all right, the structure, this structure here is still not broken even when price has been artificially pushed up. So this to us would be a wash bar, okay, a wash, all right. And when price flip the other side, this black color bar would be a rinse bar, okay, washed and the rinse. Okay. Now, more important is the identification of what we call the wash line, right? So the wash line is being identified here, automatically plotted by our system, right? So when price closed with above the previous high, and then it flipped back right in, that becomes a wash and rinse completion. So for us, we will be taking the trade short right into this bar here. All right, and then our system would confirm that the wash and rinse has already happened by plotting in a down arrow. So everything is systematic, easily to spot, and the good thing is that the wash and rinse and whatever that we have plotted here, right, they don't repaint, meaning that even when price is to move and plot in new data, right, whatever that has been printed here, they will be here. They won't disappear. Okay, so likewise, if you take a look into the recent price in NASDAQ, then a bullish wash and rinse has happened already. At this bar here, right? Of course, that I've cautioned, I've actually alerted my guys, all right, my students, that it could be a buy, and it becomes a very logical buy for the wash and rinse, because you can see that there's an arrow here. Okay, so the wash and rinse becomes very logical for a buy. That's because if you can flip into the higher time frame, and that's what we always do, then the structure of NASDAQ at this place here is still up and is not broken yet. And so we are using the wash and rinse as a clue to let us know that, hey, look, you know, we are buying at the place where people who shorter it, all right, they're going to regret the most. And if you buy on the rinse bar, all right, that's where we're going to get a lot of profit, all right, and in a very fast manner. Okay, the keyword is a lot of profit in a very fast manner, all right, but without being trapped inside. That means that we don't trade the breakout, because breakout is a good strategy, but it's a little bit outdated right now. Okay, what we do is that we trade the wash and rinse. That means that we let the fake move happen first, and then we trade with along the shoulder of the giants. All right, we trade along with the big guys. All right, so this is the way for you to counter the professionals, but in a way, right, there are some times that we might not avoid being rinsed out. Okay, however, at least we have a method to buy along with them or trade along with them. Okay, for example, this place here was a very bearish bar. We might not avoid, for example, for the STI, okay, to avoid that down bar. But at least what I'm trying to say is that you know that because of the wash and rinse, and the rinse has already happened, at least you know how to flip and turn the tide and trade to your advantage. And that's really very important. Okay. All right, now let me just continue with my slide. All right, now let's take a look into here. Okay, so this one is a chart of the Dow Jones. You can see really tons and tons of wash and rinse happening. Same thing, this is the week chart of Dow, and Dow was a huge down, right? And this was somewhere around in March. Okay, March 2020. And if you remember March 2020, last year, right, that was the height of the COVID. Right, so some people will say, hey, look, you know, when is the end? You might be catching some of the bottom here. You might be catching some of the bottom here. And after that, you say, it cannot already. This was a very ultra bearish bar, right? But what happened is that to us, we wait for that ultra bearish bar to happen. Okay, that's where people might be washed, or traders might be washed, because then they reacted to the news headline. They reacted to all these price movement then without looking at whether the structure has been broken. So we always look at the structure. Okay, if the structure is not broken, then we detect that wash and rinse. Okay, so to us, that's the washed, and because it broke into a previous low, and this is your rinse bar. So that's why, because of this, we have also entered into a lot of long-term positions on this, right? And not here, not in between, but after the wash and rinse has happened. All right. Okay. Let me just erase this and then continue on. Okay, let's take a look at this part here. All right, now then how to detect the wash and rinse. Let me just go through this one. Number one, I'm illustrating the buy. Okay, the buy. I'm not illustrating the sell. Okay, I'm just going to do one pattern. All right, because of the time issue here. So number one, the wash bar, all right, happens when price close below. Right, the keyword is must close below a previous low. Okay, and this previous low is not any previous low. It must be a sub key level. That means that you know that this is a key level that's really very important. We call these a sub key levels. All right, you must close below a previous low, which is a sub key levels. All right. However, as I mentioned just now, the levels are very complex. Why do I say it's very complex? I mean, if you take a look at the array of technical analysis or the different methods that people are using, some people are using moving average as, let's say, a support or resistance. Some people use trend line. Some people use horizontal level. Some people use pivots. Some people use Fibonacci. Now, the thing that all these people are using, they might come to a different levels. Okay, so for example, if you are using a particular method, you might have derived into a sub key levels. You might not have come into the correct levels. Okay, the market happens to be looking at another even stronger level. So what do they do? It so happened that perhaps that it can stop here, right? It might stop here at the sub key levels for a while. What the market do, all right, as general, because they detected an even stronger level, what they did is they push price down artificially, okay, into an even stronger level, right? And this pushed, we call this a washed, but this push is also with an objective. Whoever who bought here would have their stop loss being triggered, and that comes to your agony, right? Many times that you say, I decided to hold, I put my stop loss. The moment you are being stop out, okay, the moment you are being washed, and then you just flip the other side. So what we do is that as long as the structure, right, which is this even stronger level, they are not broken, and of course that we will derive all these very stronger levels from everywhere as a confluence from many different factors. And the very important things, all these very stronger levels comes from the higher time frame, which our system will automatically plot that in. Okay, I mean to automatically show us where are these very stronger levels, right? So when price are being hit right into the very stronger level, right, we identify first the wash. That means that we always wait for the wash to happen. Okay, the wash must always happen first. Okay, then our entry would be when the rinse. The rinse will happen if it close back above the sub key level line. So when it close back above the sub key level line, and then we'll initiate a buy position here. So that's where how we bought in those trades. Now, one of the questions that I always encounter is that how many bars must there be here? That means in between the wash and the rinse, how many bars must it be here? Now, the wash and rinse is a very flexible pattern, all right? At the look of my slide here, you might think that, hey, look, you know, Binni, what you are sharing with me is just a typical morning star, or maybe that I have a hammer and I have a bullish candle. The whole idea is that if you have been using candlestick pattern, you realize that sometimes the candles are very good on hindsight, and most of the time when you use it, they are not accurate anymore. All right, why is that so? Because you have to look at a specific set of candles, and you also realize that a lot of candles don't fit into the names of what you have learned. A hammer doesn't look like a hammer, a doji doesn't look like a doji, but then they still move. All right. So the whole idea is that the wash and rinse pattern is very flexible. It can have one candle here in the middle between the wash and the rinse. It can have 4, it can have 5, right? It can have 0, as what I showed you in the NASDAQ chart or the OCBC chart or the STI chart on the week level, all right? It can have 0, nothing, just a wash and followed by a rinse. More important is that, number one, the structure must not change. That means that the structure must be as the same as before. Number two, you must be able to detect these very important levels. If you don't, at least you wait for the wash to happen, and then you wait for the reins to happen. That means the reins must close back above that key sub levels that you are that we have drawn in here. Okay, so that's the wash and rinse pattern. All right. Okay. If you have any questions, you can ask me at the chat box so that I can address your questions immediately, rather than we wait for the last point that you might be confused about that. All right. So this is one of the trade in that video that I say I want to show you, but instead of this, I decided not to, and then we take a look at this trade here. Now, this trade in the NASDAQ is exactly showing in the wash and rinse on many various occasions. All right. First trade that we did on the NASDAQ, all right, this is a day chart. First trade that we did on the NASDAQ was here. Okay, so what we did is we went short. That means that we actually shorted, right, at this particular place here. Right. So just to look at it, can you see the washed and the rinse coming in? All right, can you see that washed and the rinse? Okay, let me know whether you can see that. Then I will let you know where the wash and rinse is. Yes, you can see the wash and rinse. Yeah, one of the question is that the wash and rinse is applied on all time frame. Yes, the wash and rinse pattern applied on all time frame. As generally, all right, the higher the time frame, the better it will be. The higher the time frame, the more that you would travel. So, for example, this is a day chart. All right, just by trading on the wash and rinse on this side here, we made about 400 plus points, and this side here, all right, we made about 500 plus points. Okay. I mean, just by doing one trade at each point of time. All right. So a lot of people might be using the wash and rinse in a lower time frame, such as the 1 hour or 4 hour. Now, when you happen in this manner, right, there will be a lot of noises. It is not that the wash and rinse is not accurate, right? There will be a lot of noise, and then when you do on the lower time frame, you definitely have to trade in line with the higher time frame. So therefore, I want to explain a little bit about system design. So when we design or we consult our clients on the designing of the system, we have to let them know that a lot of trades, if they want to move, right, you have to trade in line with the higher time frame, which is called a multiple time frame design. When we do this, right, in terms of a multiple time frame design, then we always will have quite a complex system design. And we will have to identify what is happening in the higher time frame, and we have to let the lower time frame trade in line with the higher time frame. And thus, because of this, then you filter out a lot of bad signal. However, when you have, let's say you are trading yourself, right? It's very difficult for our human eyes and our brains to detect what's happening in the multiple different time frame. Okay, so for example, we are looking at what is happening into the week and the month and the H4 and the H1, and then we derive a trade in the M15. Okay, so the computers are able to do that, but our human brains are very tough to do it efficiently. Okay, so therefore, to avoid this, then you always keep to the higher time frame, which is something that I suggest that my students always do. Okay, so for example, this one, right, the structure, right, is still very much down. Okay, and then we're gonna have the wash here. So let me just erase my drawing and then point to you where is the wash. So you can see that there's a wash here. So that's the wash. This is the wash. So that's your W. All right, and then this one becomes your rinse. Okay, what we do is that we will identify the wash and rinse in a higher time frame, which is the day. So this is a day chart here. All right, but our trade will always be fine-tuned in the lower time frame. That means that we will go to the lower time frame, such as the hourly bar or the 4-hourly bar. All right, to trade in the middle of this black color bar. Okay, in the middle of this black color bar. All right, so so probably our entry point is somewhere around here, and then we can derive that profit here. Okay, all right, now the other NASDAQ trade that we did, which is the 550 points, all right, if you can see, it's somewhere around here. Okay, let me just clean that up and mark that again. All right, so around here, Okay, I'm going to mark a bigger circle so that I need you to be able to see then where is that wash and rinse. All right. So under this place here, you might see multiple wash and rinse, for example. Yeah, you might say, hey, Binni, all right, I can see that this place here, let me just erase that. I can see that this place here is a wash, you know. So this is a wash, and then this is the rinse. All right. And say, oh yeah, if I short on your wash and rinse, you only travel a little bit. It's not explosive. As I mentioned, we must look at the price structure. What is that price structure here? Okay, the price structure that we have is actually that based on what happened in September, what we traded, the Nasdaq, the structure is actually up. So when we shorted here, there must be enough space, and likewise, when this the down wash and rinse happen, there's not enough space for us. Okay, so I wanted to caution, it's not only about wash and rinse, we also need to have a full spectrum of understanding, right? But the other wash and rinse that we traded on was this one here. So this bar here is that wash. Okay, so this is the wash here and the rinse happens somewhere around here. All right, and this one, but our entry was here. So this, okay, this was our entry somewhere around this marker here. All right, and price moved up very nicely, about 550 points, right? Easily, very nicely. At least the first two bar was quite easy trade for us. Okay, right. So why is it that we choose the long side? That's because I mean, just quickly to highlight that, that's because the price had a bit of a support here, right? You can see a bit of a support here, and then the market artificially pushed it down to let people think that it's actually very, very bearish. So they say that, hey, look, you know, I'm just going to break this level here. But for the lower time frame, they might not have seen that actually there's some form of a support here. Of course, the structure is up, all right, and there's some form of support here, all right. So this is a very, very common trick in the market, all right. How do we avoid that? Then all our trades, we wait for the wash to happen and we trade on the rinse. Okay, and we never sell at the bottom. So to us, because the structure is up, the price is near to some support, we never short at the bottom, and that's one of the rules. Okay, so there's a few questions. Right, let me just clean that away. I think one of the questions is asking me whether I see the wash and rinse happening. Do you see the wash and rinse happening 2 candles before? Yes, okay, so I think you are referring to this one here. So that's the wash. All right, now as I mentioned, we need to know what is the you know, the condition. So when the wash and rinse happen, there will definitely be a lot. Okay, that's why in my first statement here, I said that you cannot just be looking out for a wash and rinse. Okay, just purely to say, hey, look, today I know that you introduce a wash and rinse, right? Then it's going to happen. Okay, but the good wash and rinse to buy actually happens here. This one is the good one. Okay, as I mentioned, there is a support here. So this is your S. Okay, there's a support here. Price has been artificially pushed down to break below one of the low, hit right into the support, right, which is your very strong level. So this is probably one of the sub levels. All right, push it down and then rinse back up. And in order to make sure that we have the to have the space, all the trades will happen in the lower time frame, not at the end of this bar, but fine tune in the lower time frame. Yes, there is a washer based on that structure, and as well as there's a support here. Okay. The next question is that what is the higher time frame for any of our forex trade or any of our indexes trade, right? The higher time frame would be a day, the lower time frame would be the 1 hour or the H4. That's what we usually trade on. The next question is, I assume wait for the candle to close on the daily before you look for an entry on the lower time frame to confirm the raw time. No, we don't wait for the candle to happen, all right, to confirm on the daily, right? We don't wait for that to confirm, right? Just based on that wash and rinse or based on the structure we have already entered. So let me just show you the lower time frame chart, okay, later. Let me just finish my slide first. Okay. All right, let's move on. Okay, let's move on here. So that's the wash and rinse. Okay, so for example, this is an oil chart, and I must show you the oil chart. So oil is right now about 60 plus already. All right. Let's talk about this very, very obvious, very, very common things that happen. Take a look at this one here. So we know that there's a support. We know that there's a support, right? So that's the S2, and then this is the S1. Now, when price come near to the S1 and the S2, what would people be thinking of? What would they be doing? They will say, hey, look, oil is at 30-something dollars already, very low. All right, let me just buy based on that support here, buy based on the support here. And what would they do? They will just put the stop loss somewhere slightly below. Okay, all right, because then it's very low already, and then that support has been touched twice. And this is a very typical wash and rinse. Remember, I talk about that it's not only about you have the oil to trade, that's the futures market, we have the options market, we have the over-the-counter instruments, we have the derivative, and we have tons and tons of other instruments, right? So they know the levels. Right? So what they can do is that they can just make sure price stay below that stated level for X period of time, and usually 1 day is enough already. Okay, make sure it stay below at that stated level for a period of time, short time. But that's enough to kill a lot of traders, you know. I mean, if you put a stop loss around here, right, that's enough to kill you. And what happened to that wash and rinse behavior? So the oil traders will wash right at this bar here. So this bar and at this bar, and then push price even lower to rinse some more before moving up. Okay, before moving up, right? So for us, what we do is that we don't trade that breakout. No. Okay, anything that's a breakout to us is a very dangerous strategy. All right. So what we do is that we wait for the wash to happen. And sometimes if we are very busy, if you don't have time to look at the wash, right, then you can rely on that tick here to confirm. Okay, to confirm that the wash has already happened. So we have this stick here, or then we have another one more stick that we built in here. Again, the structure is up, so therefore we only rely on that green color tick that we plotted here. Okay, so another green color tick. All right, that's also the wash and rinse. All right, so this one is the wash and rinse, and then we have another one more here, this one. Okay, because the structure is up here. All right. Okay, so this is what I'm trying to explain. So the wash and rinse happen in everywhere. Okay. All right. This is silver. I'm not sure whether you remember that silver were very popular and hot, right, during the GameStop frenzy. So the group of Reddit people, trader, what they did is that they went into GameStop, all right, and then they also target silver, and silver actually move up. Okay, this was the gap of the silver here, because of the GameStop. Now, what our system did is that there's already a structure at the bottom. Okay, so a structure at the bottom already. So we knew that probably we are looking for a buy. Okay, then our first buy happens at here. So that's the first buy. Okay. Wow, but more important, our next buy happens at this arrow here. But again, the arrow is to confirm the wash and rinse, right? The washed was this bar, so this is the W. Okay, the rinse is this bar. All right. Our entry will be in the lower time frame and somewhere in the middle already. So that's our entry. Okay, in fact, that we traded into the silver. And when that news came out, oh, that was a very nice trade. But for us, okay, and when the GameStop frenzy came out, right, and then we say, hey, look, you know, we should be getting out of our trade because we are prepared for the rinse to come again. Where is the rinse? Right, price close above that. So this one, so this is the wash bar here. So that's close above it, and then that's the rinse level. So this one. So what we did is we took the short side again somewhere in the middle. So we eat the up and then we eat the sell as well. Okay, so that's our trade here. Let me just answer some of the questions. Is a sub level 50% of the first candle? Sub level 50% of the first candle? No, we don't work on this one. Okay, the sub level it's based on the previous historical prices, okay, on the higher time frame. That means that if I'm trading on the day, then the sub level will always be something that is based on a higher time frame, which is the week. So if I'm trading on, let's say, the wash and reads is in the H for 4 hour, then the sub level will come from the day. So it's always from the higher time frame. Do you have a slide showing the conditions to be present before a wash and rinse pattern to be valid? Okay, let me just talk about this one. It's not in this slide here. The aim of this slide is really to introduce to you that there is this phenomena and why is this phenomena happening, and if this happening, then you don't be surprised. Okay, you need to know how to say reverse it by knowing that there's this wash and rinse happening. Okay, so that's a wash and that's a rinse. All right. Okay, then next, how to spot this recurring pattern. This one I covered already. This is S&P 500. All right. One of the key thing, all right, a good wash and rinse pattern that happened when I kept talking about the structure. So for example, one of the way that we identify a structure is that we tend to prefer to trade in line with, let's say, the trend. So if the trend is down, right, then let's say the trend is down, right, we will be looking at a sell wash and rinse. Okay, so for example, this is S&P 500. So can you see this red arrow coming inside here, the red arrow here? So if the immediate, let's say the trend is down, we prefer to take something that's with the trend. And there was a bit of the wash here, so price actually moved a little bit up. All right, move right into a zone of resistance, and when you flip the other side, that becomes a rinse pattern. So if you are busy, all right, then the arrow would tells you confirm this is a rinse. Okay, and if you have any idea that you want to buy at this arrow here, this one. Okay, so let's say for example, you are thinking of buying, then you have to consider that the wash and rinse has already happened. People have started to enter a short position based on wash and rinse. At least for us, we have already shorted that short position. There was a washer that's rinse here, right? Then once you see this arrow here that is automatically plotted, then you have to be very careful to go short, to buy, okay, because we have already shorted. All right. So let's say for example, take a look at this one here, S&P 500. Let's say for example, you say that, hey, look, this is very bearish, right? And some of the people would be looking at, if this is a down bar, so this is very bearish, right? The trend is down, right? How about I would sell on the retracement here? That means that it become right a little bit, then you sell on the retracement, right? But a lot of traders have failed to recognize that somewhere around at the bottom here, in the next higher time frame, that they didn't manage to see, because I explained before already, right? That all these algos, they are able to look at levels easily, very fast, and because of the speed and because of their power, we are not able to do that. Okay, so they know exactly what are the levels and what are the levels to trigger, so they push that down, but just purely relying on support resistance, just purely on that. A lot of people might see these as a support, for example. So this is the S. So when they push it down, it pushed right into an S, which is even a stronger level. So it hit into a sub level, which is here, for example, and it triggered the stop loss and hit right into the even stronger level. Okay, and then we are able to spot all that, and then we plug in that little arrow here, the up arrow here, that shows the rinse bar. Okay, so for example, if you have shorted here on the retracement, thinking the trend will continue, once you see that green bar coming in, then you have to caution a little bit on your short, right? So today the objective is that if you can understand that there's the wash behavior coming, let's say, in a strong support, of course we have to rely on the structure, then and you see the price actually rinse back up, then be very careful, because the wash and rinse has already happened. So for us, we use the wash and rinse as a trigger. Perhaps that you can use the wash and rinse as a form of a how to say, to use it as a form to let you know that, hey, look, your sell trade might not be good anymore. Okay, so that's how you can make use of information that I just shared with you. All right, so definitely tons of wash and rinse, like this one also another bearish tick, another tick here. All right, so I'm just going to go quickly on this one I presented already. Okay, let's come back to this Xiaomi here, right? One of the questions I always get is that can we use the wash and rinse in the stock? The answer is yes. Okay, it works very well, and we are just using the wash and rinse in the stock. If you take a look at Xiaomi right now, okay, now let's talk about the trend, okay, and let's talk about the price behavior first, right? As I mentioned, the structure, we always get that from the higher time. Let's talk about the trend. The trend at this moment is going up. Wait, let me just get a point. The trend at this moment is actually going up. That's for example, if you take a look at this part that is being highlighted in red, right? Can you see that it is up, and price has actually closed above the previous high? Okay, but the market has to purposely push the price down such that it washed the previous low, but then it rinse back up here. Okay, so this one is the rinse bar. It rinse back up here immediately. Okay, now you might say that, hey, look, the trend is up. You might say that it broke above a very strong level, right? For example, this level here. All right. Okay. Now the whole idea is that, why did I talk about this trade, right, in the SGX Academy session? Because that's a very nice trade that definitely must take. And in fact, if you attended that session and then you took it, then it's a huge up, because it's almost like double the amount of investment you have. All right. Now the wash happens here, and it hit right into, for example, a strong support. Okay, a strong support. All right. So many times you might say, hey, look, my doji doesn't work well, my doji candle doesn't work well, my harami doesn't work well, and whatever doesn't work well. Okay. But at the end of the day, if you can just rely purely on wash, that means it's a washed, people are being washed out. Those people who sold here, they regretted because they thought that it's bearish already. Let me just get out. But then the big guys are actually accumulating here. They are buying very strongly here. So once they finish buying, they release that, and then that's it. All right, so it just move up. So it's just a typical, very nice wash and rinse trade that we did on Xiaomi. Okay, so same thing for OCBC. Do you see that wash and rinse already? Now, do you see that? There was this wash here, so this is the wash bar. Okay, so that's the wash bar, so that's the W, and then that's the rinse bar. Okay, and perhaps that you're gonna say, hey, look, you are showing me a weekly chart. Why are you showing me a weekly chart when things are very slow? But if you look at the outcome, they are not slow. From the point that you bought in, it never looked back at all. So if you are using a very fast chart, for example, let's say a day or H1, you're gonna get a lot of agony from trading, right? And then sometimes you look at it, I'm so like frustrated because one day it goes up, the other day it's actually moves down. Okay, so there's a lot of agony, and you realize that your trade will perform very well, and you are likely going to hold for a lot of profit if it can move up very fast. Okay, if it can explode. So that's the key idea here of why we only trade on the wash and rinse. Okay, so wash here and the rinse here. Likewise, price at the support, it is up, then it's going to hit into this wash bar. Okay, wash bar, and then eventually it rinse back up. And you realize that this is very recent, just a few weeks ago. The banks has been just moving up like nobody's business. Okay, why is that so? Okay, that's because then we had the wash and rinse here. Okay, and I talk about the wash and rinse to my students at about here at 10:35, because we fine tune that to enter into a lower time frame trade. Okay, all right. Let me just erase this. Now, one of the questions is that when applied to individual stocks, right, is the volume transacted an important consideration for the WR pattern, or pattern is all that is considered? Now, you have to understand, because the wash and rinse plays on before everybody knows about it. All right, it is a trick behavior. Would you want to know to let a lot of people know about the trick that you performed, that you did, you're going to do, or you are doing? No, right? So very often the volume will not come in yet. Okay, the volume might come in at this bar here, because because that's where everybody join the game and they probably trade on the breakout, right? Or the volume might come in this bar here. But when we trade on the wash and rinse in the lower time frame around the mid of this bar, no, unlikely you're going to get the volume. Okay, all right. Just to let you know, the wash and rinse you are not going to get. I mean, you probably won't get it from somebody else because I've designed the whole system. How the interactions of the higher time frame with the lower time frame and fine-tune the lower time frame, the exact trigger, and how we're going to trigger that for the individual equities in the forex, in the commodities, how it's going to be used, right? That is being designed by myself. Okay. So in your experience, do you see the wash and rinse usually happening around support resistance levels? Yes, but we also in line with the structure. I mean, for example, simple things like the trend, etc. Or are there other scenario that has a higher frequency of wash and rinse happening? Usually at places where they are okay. Now it has to do this, right? You have to understand there are books which we have no access to. Okay, only the big guys have. So in these books, they contain levels and individual volume, as explained already. Right now, usually when we put in the order book, it will be based on certain key levels, certain levels. So for example, certain guideline. Let's say we talk about Tesla. Right, Tesla has moved up to $800, $900 already. So then they will say that if Tesla is to come down, it cannot be it cannot drop by 35%. However, different banks is going to offer the 35% differently at a different period of time. All right. So for example, Bank A is going to offer 35% from the high, but then the high, they determine the strike price at, for example, a month ago. So that strike price might be at $700. Or the other bank might offer that also, again, the Tesla at, let's say, $800, all right, the strike price, and then 35% of 800 and 35% of 700, they are different. Okay, so the wash and rinse would happen in a location where most of the people will be triggered. That means that if they manage to trigger that level, it's going to result in a ultimate profit for them. Okay, but we don't have this book here. We don't have the book. We don't have access to the book. All right. So in order for us to guess that, then of course, then we're going to rely on certain things that is coming in from the higher time frame, from the bigger structure, and from how the big guys derive all these levels. And these will come basically from the higher time frame. Okay. And then we wait for the wash and rinse to happen. All right. So back to your question here. It has to be, of course, near to a levels, but the levels are not all, because then a levels might be obvious to you, but then it might not be their levels. Okay, so therefore we have to again follow what they commonly use. Okay, not really 100% on totally support resistance, but also again on multiple of things. Okay. Okay, sorry. Next question is the wash and rinse usually how many bars? Explain. It can be 2 bars, it can be 3 bars, it can be 4, it can be 6, it can be 10. There is really no fixed one. So for example, this one is only 2 bars here. Okay, so this one has in between 1, 2, 3, 4. Okay, our entry was around here. Okay, this place here. Our entry is around this place here. Okay, all right, but it is in between. There's 1, 2, 3 bars here. Okay. Now, for the equities, do we first analyze the WR in the weekly chart first and then move on to the day chart? Yes, this is what I recommend for newbies. What would be the backup plan or cut loss if the WR fail? Well, let's say, for example, if this is the WR here, all right, then our entry is here. Right, then the stop loss will be at the rinse bar low. Okay, because this one is the maximum power of the bets. Okay, so they managed to rinse it down here and flip the other side. So therefore, these will become stop loss. Right. But one of the things is that when the wash and rinse pattern is successful, you're going to realize that your profit is going to come very fast. That's one thing. The profit versus the stop loss is the reward to risk ratio is going to be very high. Right. Okay, let me just quickly move on to the rest. So gold, going back into gold, right? So that's a typical wash and rinse that happen here. You can see the wash and rinse now very clearly already once I covered the wash and rinse, all right? Okay, next question is, I'm just going to go through this quickly, all right? So a lot of people are going to ask me, hey, look, how accurate is your system? You have to understand, right? Uh, a lot, or in fact, right, most of my systems are semi-automated. We have the capability to trade into a fully automated system. That means we have capability to develop that, right? But we still have human to go and gut it, to go and look at it, to go and tell the machines that we're going to override your decision. Okay, so for you, all right, you have to understand if this is when we used it, right, we use it as an indication. That means that whatever they're going to see that is being plotted up here, so this one, these arrows here, all these lines, right, we call these the alien wash indicator, which is something that we have programmed, and we have programmed that for the MT4 and the MT5 as well. So the whole idea is that you put it there so they can see it quickly, easily. So therefore, for example, you have no time, and then or that you want something that jumps at you, and you want a signal that's unbiased, or you don't want to miss any opportunity to make money. Or for myself, right, basically I just want to outsource it to the machine to plot for me, because then maybe sometimes I don't trust myself, sometimes I'm very emotional, and then I tend to see things that I'm not supposed to see. Okay, so I don't want this to happen. So that's why we want the trading to be very systematic and to have no bias. Okay, that means that it's there, it's there, it's not there, it's not there. There's no way that we can come out with it. So we designed this alien wash and we programmed that into a into MT4 and MT5, right? So if you ask me what is this indicator about that I'm showing here, right? As the name suggests, because it's an indication, it helps you in your decision making and alerts you and let you get prepared, right? It's not to say that, hey, look, when the arrow appears, let me just go and immediately trade that. Okay, if this is happening, then you are not seeing the huge funds removing humans in our trades. You are not seeing the 100% automation coming in for the big guys. Okay. So therefore, it helps us in our work. It helps us in our decision making. It helps us when we are, mentally not very strong. Okay, because to the machines, to the programming code, right, 1 + 1 is always equal to 2. Okay, it's always plotting 0 and 1 when we talk about programming and for that machine. Okay, all right, now. Some people ask me that how come I put in the tick and the arrow, I follow them, right? Then they are not accurate. As I mentioned, all these are all showing you the outcome. We don't trade when that arrow happens. We trade before it happens. Okay, and all these arrows and horizontal lines, they help us a lot in our decision making, in our look of the trades. And of course, that if you take a look at a little bit more complicated system here, all right, then you're going to have another one which called the weak wash line. Okay, so as I mentioned, we always refer to the higher time frame, the weak wash line here. All right, as an aid to help us in terms of our trade. We always refer to the higher time frame. Okay, so that's the wash, the US election. So this one is STI. That's one of our trades. So you have the arrow here. If you put in the tall indicator into the Phillips MT4, okay, and look for SG100. When STI was here at 3,000, okay, we already plotted the sell arrow here, the wash here, right? If you have a little bit of a context, this was a huge up, and STI here was 3,000. One of the things that you have to recognize that things have changed is, you see, this long, huge bar. So can you see that this super huge bar that is so bullish? Is like STI is going to break through the 3,000. Can you imagine the number of people who are going to buy at the 3,000 here and later to find themselves very, very disappointed because they thought that, wow, the news is going to report 3,000, we're going to break that, etc. And the next moment they hit the 3,000 or they buy near at 3,000, let's say 2,980, 2,980, 2,950. They soon find that STI doesn't move. It doesn't move. It's actually hovering here for so many days, all right? But ultimately, what happened? The wash and rinse happened, all right? And then we had our short, Okay, we had our indication of a short, and then from here STI from 3,000 actually dropped, all right, towards another level, and then we have to buy here to tell us that, hey, look, we're going to buy into the STI. Okay, so that's how we use all these indications to help us. Okay. All right, now, so if you want to get a copy of the wash and rinse, then today with the Philip clients, then I'm actually giving out the 1 month trial. Now, this is the last time that I'm giving out the 1 month trial because we only work on 3 promotions. Okay, so this is the last one, the third one already. All right, so this you can go to this website here or scan, where you can find, you can key in also or scan, right? Or you can just take a photo right now, right? And to go into the website to download the free trial. The trial is 1 month. Okay, download the free trial, put into the Philip Futures MT5 platform. Okay, it only works on the MT5 platform because actually this is a sponsored version. They sponsor for that. You're gonna find no restriction in the usage, just that this one is valid for 1 month. Okay, so there's also a limited number of trials. So please go and get the wash and rinse indicator. All right, it's free. Go and get it at this website here. Now, I'll also be doing a training webinar, all right, on the use of this indicator, which is what we call the TOR indicator that plots the wash and rinse. All right, so the training session is on 23rd of March, Tuesday, 8:30 to 9:15 p.m. So once you fill in the form, right, you will automatically, and please confirm your email, please verify your email, right? You will automatically send you the link to the indicator and the details of the Zoom webinar. The Zoom webinar will be there, but again, that we will remind you a day before the Zoom webinar, right? So go and get it. It's free of charge. Okay, so this is the website. Now, should you want to know how to use the wash and rinse, the full system, all right, when I talk about the structure, when I talk about what to use, and then you find that, hey, I didn't talk about certain things, right? If you want to know that, then under the Philip Futures promotion, this is the third one that we are launching with them, meaning that after this, no more already. No more at the 252, no more, all right? Then you can take that training package, which is 3 months, the alien room, all right? Also in the same link, the price is 252. However, with Philip's Futures, if you are new to them, the new clients, right? Then if you make a funding of $1,000, all right, then they will reimburse $100 cash, right, into your account. In a way, right, your cost fee is 152. Okay. Now, what does the cost fee include? You will be taught, right, everything of the use of TOR, all right, and as well as to get the TOR indicator. That means the indicator that plots the wash and rinse, and the other indicators that we have, all right? And it's limited to the first 30 approved account for the reimbursement, and of course the other terms and conditions you can find in the website, all right? Okay, 152 to me is that's cheaper than the tuition, but you get the full system. In fact, that we have run this for twice already, and the students they are trading the WR method, the wash and rinse method, all right, which we call the TOR strategy. Okay, now under this special promotion, what you're gonna get the 3 months alien room. That means it's a subscription based 3 months. You will get the 12 months instead of 3 months. You get a 12 months broadcast of the signal, the TOR signals into your Telegram. You get 12 months use of the TOR indicator, and then you have 3 live webinars under their request. I don't actually provide because I have the recorded session already, but under Philip Futures promotion, they requested that the clients must be properly taken care of. So we schedule the 3 live webinars, and the dates are here: 8 April, 12 April, 15 April, right? 9:30 to 10:30. And as well as that, the moment that you sign up, you're gonna get the that means the moment you pay the fees, the 252, right? You're gonna get the recorded session on how to use the wash and rinse, as well as the wash and rinse indicator right in your mailbox. Okay, meaning that you're gonna get all these recording of how to use a TOR system, all right, and as well as the full set of indicators. Okay, altogether we have 3 right, in our usage, because remember we have 1 that shows the structure, all right, in the higher time frame, and of course that $100 will be reimbursed to your account if you are a new client. Okay, now once you join the course, then this would be the Tor alerts that's being sent to your mobile phones, as well as we have multiple support platforms, right? Meaning that every Tuesday and every Thursday, we're going to have our webinars that we're going to discuss what's the trade, and then every Thursday, we're going to reinforce your learning. So within the 3 months, you're going to learn as much as possible, all right? And in fact, that those people who took the previous 2 rounds of promotions, they are still attending the every Tuesday and every Thursday webinar. And if you can't attend, you can have the recorded session. Of course, that we're going to put in the trades that we're looking at every day, almost every day in our Facebook private group. All right. So, for example, these are the trades, and then these are the use of the wash and rinse. And this is the H4 time frame. I talk about that. We have the structure. So this is the structure here, and then we're going to say that we have a specific trigger. So this is the trigger. You're going to say, hey, look, where are these boxes coming from? And that's our indicator, or teaching you how to trade in multiple time frames. So altogether, there's 3 sets, right? But of course, that when you download the free version, which is Tor free ones, and we're only giving you the Tor that shows the wash and rinse indication, the one I'm showing. Okay. All right. Same thing. If you have anything, you can contact us. And then if you like to get the free trial, then that's where the free trial is. Okay. So let me just go back into here to give you the course date and the promotion, and answer some of the questions here. Okay. All right. Can it be used on the ETF? Yes, it can be used on the ETF. However, because the ETF is a combination of stocks, right? So it might not move that explosive. Okay. Would Tor show for stocks with no derivative? No, because we plot that into the, let me just show it to you, right? Because we plot that into, we put that into MT5. Okay, so this is the MT5 here. Okay, so basically Tor would show all the wash and rinse for all the instruments that's under the Philip MT5. Okay, so we have the Singapore stocks, then we're gonna have the forex, the indexes, the US, the Hong Kong stocks, and the US stocks as well. Okay, but again, that it's what we often used in is in the lower time frame we trade that on the forex, in the higher time frame we show that on the stocks. All right. Is there a way to filter the WR pattern using Azure Stock Screener? No. Okay, because that is proprietary to us. Okay, we are unlikely to code it open source. Is there an alert for Tor, or do we have to check our watch list? Now, the current Telegram broadcast is only happening into the forex, the broadcast. So we are working on coming up with a whole list. That means a whole list to show you the wash and rinse, but then that would be on the later on development. So currently don't have. What we can do is that you can put the Tor indicator, all right, all of them into a VPS and then send the alerts to yourself. That means that, for example, you have to have your own VPS, okay, and that VPS runs 24 hours, and you put the Tor into all of the stocks here, and once it has a signal, then you can send to it. That can be done, but not from us. Okay, all right. In the WR concept, you mentioned that we need to look at the higher time frame, then enter using the lower time frame. Would there be a possibility that we enter and the higher time frame closes against us and the WR did not follow through? Yes, as of all methods, there is always a failure. That is always why we have a structure and we trade that on a higher time frame. Okay? There is no 100% to say that it will definitely work. Okay, so answer is yes. But if you follow the prescription that we are doing, right, then generally is working very well. So let's show you. This is the dollar yen. So for example, this is the dollar yen. Can you see that this place here? All right. There's this rinse bar plotted here, the arrow, right? And then this is the watch. Okay, so this is the watch W, and that's the rinse. Okay. Now what we do is that this is the higher time frame. Right? For us, what we do is that we will go to the lower time frame. Okay. Oh, so let me just show you the lower time frame, and this is our lower time frame. Okay, so this is how we trade in the lower time frame. All right, this is currently what's being plotted here to give us all that different thing. So for us, for dollar yen, if you are trading the forex, we had a buy signal around here. Okay, so that's the washed line plotted. So this one is a wash and rinse, a washed W. All right, that's the rinse. Okay, so that's the lower time frame. So there's a lot of things to learn in our method. I mean, our method is not just about wash and rinse. Okay, there's many things that we want to use it. Okay, but it's also easy because a lot of people have used other method and they find that that's very complicated. When it comes to ours, you know, it's very easy because we have all the tools to help them. So basically, I teach my students, when you see magenta lines, we are looking to buy. When you see green lines, we're actually looking to sell. So right now, we are waiting to sell in the dollar yen. We're just waiting for the signal. It hasn't come yet, all right? Okay. Let me just move on to the rest of the question. Okay. Can use for Singapore stocks, can use for stocks that's in the MT5, okay? But to automatically scan, look for the tall signal. But if you want to use, let's say, the concept of wash and rinse that's being taught in the course, all right, then you can use it for any Singapore stocks. But ideally, those with institutional presence, all right? We are working very much on the institutional hitting a certain important levels for them. Okay, so we need to look for use it on stocks with institutional involvement. All right, the MT5 does not allow us to use the call signal on equities, right? How to overcome this? The MT5 only allows you to use on TOR signal on equities that are being allowed or offered by Philip Futures for this promotion. Okay, that means that Philip Futures have this particular CFDs in MT5. You can use that. That is for TOR. But TOR itself as a method can be used in any instrument. So let's say you learn how to use wash and rinse, you learn how to identify the structure, you learn how to trade that, then you can take this and trade in any US stocks, any Hong Kong stocks, any Singapore stocks. Okay, so that's the whole idea. That's the reason why even we have the tools, we still want to be involved in the education. The 125 will allows us to access the TOR signal for 1 year. Yes, the TOR signal, the broadcast here, okay, and the use of the TOR indicator. Okay, remember we have 3, but if you for under the promotion, all right, is the 12-month use of the TOR indicator. Okay, all right. But after, if you don't download the TOR indicator, right, in these 3 months of the alien group, then you will expire. You download inside your computer, save it, then you have 12 months use of the TOR indicator, right? So I think I missed the answer. For those without Philip Futures account, where can we install TOR? Okay, now let me just go into the into the web page, right? And then sorry, let me just go into this one here. Okay, now this, once you go into the okay, wait, I'm at pointer side. Right. Once you click on the link, right, you're gonna come inside here, which is the form. You fill in the form, right? Once you fill in the form and then click register, I'm not a robot. You know, they will ask you to confirm your email and then they will send you. But this is a sponsored. The trial is a sponsored. You can only work on the Philip MT5, but you can work on the demo account. That means that you receive the email. All right, you're going to get a demo account from Philip Futures MT5 free of charge. Okay, and you can use that already. Right, so this trial version can use on the demo account, so you don't need to sign for their account. Okay, don't need. Now, however, if you want to take the promotion, all right, and then you pay the 252, you get trained, and then you get that special 1 year instead of 3 months, right? 1 year use of the indicator. For that indicator, you must use on the Philip Futures MT5 because then that's sponsored by them. Okay, so they give you the $100. If you're new account, you fund 1,000, they give you the $100, reimburse that back. But then they say that, hey, look, you must use the MT5 broker platform. All right. Okay. So you don't need the actual Philip Futures account. You just make sure you get a demo from them. So download the MT5, get the demo. Don't need money, right? So any last questions for me before I end the session? So end of the day, I mean, if you don't want to sign for the course, it's fine, right? I just need you to recognize that there is a wash and rinse here. Okay, be careful when you trade. Trading is no longer the same anymore. All right. So since this TOR indicator trial is free of charge for use for 1 month, and then you just have to get a demo account, right? Don't need money, so may as well go and get it. All right. And if you are interested, then this will be the last time we are offering at a 252 with a $100, because then we have 3 promotions already. All right. And the promotion has been taken up very well. So we're going to stop at this promotion. All right. And then last round for this promotion. Okay. All right. No other questions. I would like to end the session here. So thanks a lot for joining. I'm just going to pass this back to Minghui so that in case that she has some things to let you know. All right. So I'm just going to stop showing my screen. Thank you a lot.
All right. Thank you very much for the insights, Binni, and thank you very much, everybody, for your time tuning into this webinar tonight. We'll be sending everyone a link to today's webinar so you can watch it again if you'd like to. Do visit our website, fluidfutures.com.sg, if you'd like to reach out to us, or indicate in the post-webinar survey if you would like for us to reach out to you. Yeah, so that's all for today. Thank you, everyone, and goodbye.